Ever wondered what the stock market is all about and how you can be a part of it? It might seem complicated, but at its core, it's a powerful tool for building wealth. Let's break it down into simple, easy-to-understand concepts so you can start your investing journey with confidence. So, what exactly is a stock? Imagine a large company like a bakery famous for its delicious cakes. To grow, the bakery needs more money than it currently has. It decides to divide ownership of the entire company into tiny, equal pieces. Each one of these pieces is called a share of stock. When you buy a share, you're not just giving the company money, you're becoming a part owner of that business. As the company succeeds and becomes more profitable, the value of your tiny piece, your share, can increase. This means your initial investment grows, and you share in the company's success. Why would a company want to sell off pieces of itself in the first place? It's all about raising capital to fuel growth and innovation. Think back to our bakery. By selling shares, it can raise a significant amount of money from thousands of investors. This influx of cash can be used for major projects, like building a brand new, state-of-the-art factory to bake even more cakes. It could also fund a massive marketing campaign to reach new customers or finance the research and development of a new line of gluten-free pastries. Essentially, issuing stock allows a company to turn its future potential into present-day funding, enabling expansion that wouldn't be possible otherwise. Now, where does all this buying and selling happen? It takes place on stock exchanges. These are organized marketplaces where buyers and sellers come together to trade shares. You've probably heard of the big ones like the New York Stock Exchange, NYSE, with its iconic trading floor, or the tech-heavy NASDAQ, where giants like Apple and Amazon are listed. These exchanges act as the central nervous system of the financial world, ensuring that trades are conducted in a fair and orderly manner, with prices determined by the constant ebb and flow of supply and demand. Within these markets, you'll often hear commentators talk about bull and bear markets. These terms are simple metaphors for the overall direction and mood of the market. A bull market is characterized by optimism, investor confidence, and rising stock prices. Like a bull thrusting its horns upwards, the market is on an upward charge. Conversely, a bear market is a period of pessimism and falling prices, where the market seems to be swiping downwards like a bear's paw. Understanding these cycles is key to navigating the market's natural ups and downs. Feeling ready to jump in? Getting started is more straightforward than you might think. The first step is to set clear financial goals. Are you saving for retirement, a down payment on a house, or simply looking to grow your money over the next decade? Your goals will shape your investment strategy. Next, you'll need to open a brokerage account. This is an account with a financial firm that allows you to buy and sell stocks. Finally, the real work begins: research. You need to investigate companies, understand their business models, and decide which stocks align with your goals. As you start choosing stocks, one of the most important principles to remember is diversification. Don't put all your eggs in one basket. Imagine your investment portfolio as a basket filled with different types of assets. Instead of only holding stock in one tech company, you would spread your investment across various sectors like healthcare, energy, and consumer goods. You might even add other assets like bonds or real estate funds. This strategy helps to spread out and reduce your risk. If one sector performs poorly, your other investments can help balance out the potential losses. The stock market isn't a get-rich-quick scheme. It's a marathon, not a sprint. The key to success is adopting a long-term perspective. While markets will always have their ups and downs in the short term, history has shown that, over long periods, the market has consistently trended upwards. By staying invested, remaining patient during downturns, and focusing on your long-term goals, you can harness the power of compounding and build substantial wealth over time. Starting today is the first step on that rewarding journey.